Hey, what is up, guys? Luke here. Hope you guys having a wonderful morning, evening, or afternoon. Happy morning after evening. Just kidding, guys. All right, so today we had beautiful setups, right? We had a little bit today. Tomorrow we have CPI. All right, I'm trying to make this a bit quick, easy, cut to the chase. No BS. Okay, so here we have CPI tomorrow dropping at 8:30 in the morning, New York Central Time, local time. Okay, so today we would expect the market to be slow or in a seek and destroy mode, right? So it's trying to seek liquidity, hunt it, leave engineer liquidity behind, move somewhere else, hunt it, leave liquidity behind, move somewhere else, right? So what did we do? We came all the way up, we came down, we formed relative equal lows. If I remove these sessions, we this area is too smooth, all right? We left such an area smooth. Retail users, retail traders, retail mindset is gonna think, oh my god, we have a strong demand zone. So they're gonna be planning their longs, right? And for the CPI. Likewise, people would think today we made high, another high, these levels here. So here we left another smooth area right here. Come on, if it lets me through it. Here. Right? People are going to think this is a supply zone or resistance. So they're going to be planning their shorts here. So the market engineered, I mean, if the price went down, but like I would expect it to go up all day that way, to be honest with you. But there was NWG, so it was acceptable. But people think this is resistance. People here think this is support or demand zone, right? So they're gonna be longing people here, inducing people into longing from this area, inducing people to be shorting from this area, right? So we engineered liquidity for tomorrow, right? So we took the lows, we took the highs, we took the lows, we took more lows, we took the highs, and now we're taking even more highs, right? So seek and destroy. Anyway, so what I would think tomorrow is probably both sides can be attacked, in my opinion. This is too smooth. It has to be made jagged by the market, these lows. It's too smooth. The market doesn't like that. The algorithm knows that it's too smooth and it will attack it most likely. These here, if the price probably before the news drops, price will probably come back down, and then people think this is a whole really hard area to break, in my opinion. But anyway, let's go over today. Today I'm up 753 on this account, 1,000 on my new 100k account. I'm up 1.4k almost, just shy of that. And I did a bit of intraday scalping. One was using the strategy, one was using, I'm going to go over it in a second. So what did we do? In the morning, we saw previous session low. That was step one. Step two, do we have a chosh? We have a chosh right here. Awesome. Do we have an FVG? We have an FVG right here. Awesome, awesome. Why is this FVG not used and this chosh not used and this FVG? Because we didn't sweep. This here is the same as this. Here we swept here. So the candle after the chosh, sorry, the candle after the sweep, we swept the previous session low with this candle. So from this point onwards, we wait for the chosh. We got chosh, we got an FVG. What else do you guys see? We have a low, lower low, higher high. So this highest green candle from this low to this low is our breaker block. All right, you can see here we have an FVG, which is our entry. You can enter this FVG as well, because it's the candle that formed the chosh. So this FVG or this FVG, but this FVG is inside this breaker block. So this is a unicorn entry. Notice the bodies, guys. Notice the bodies. I was with a student and I showed him this, so I want to show you guys as well. That's the midpoint of it. Let's find the 25% point. And let's find the 75 point. Let's find the 25%. So these areas are not zones, okay? Even FVGs, they are reference point. The midpoint, the high and the low is the most important, but even the quarters, the 25% and the 75% is very important. So 0, 25, 50%, 75, 100%, okay? Notice the price. Look at the candles. Body at the 50, wick at that, body at the 25, wick at the 50. 50, 50, 25, 25, 75, 50, 75, 75, 75, 0, 0, 100, 100, 100, 100, 100, 100, 100, 100, 100. This is algorithmic. Okay, this is how you know there's institutional sponsorship behind your trade. So you can be more, when you see these signatures, you'll be like, okay, nice, I'll go on my back, I'm gonna go long, and you probably expect the market to go really long, right? So we had the sweep, sorry, we had our entry, we entered here, we target previous session high. How else can it, well, let's say I aim for here, I enter somewhere around here, stop at the low, take the high, the Asia. Imagine this was not enough. All right, you want to hold longer. How can you hold longer? Well, we can use the projection, the swing projection, the breaker block swing projection theory, which tells us to use standard deviation from the low, lower, low, higher, high. So this is the breaker block. So from this low manipulated this low. So we anchor it from the low that manipulated the other low and take it to the high, swing high. Plot your standard deviations, and you can see. Oh my god, what did I just do? Let me just do this just in case. Let me draw it again. Don't want to fiddle with the settings. All right, so this is our maximum TP. But if you want to hold more, if you're just a greedy person, you want to hold more, I know I am, you would go to 1. You would take partial here, right? 1. We want to see, did we close above 1 or did we reject? If we close above 1, then we most likely go to 2. If we reject fast below the 1, that means we'll come back to the equilibrium from that high that was formed, that was going to be formed all the way to the low. We're going to have an example in a second, right? But it didn't close above 1 very strongly, even leaving a fair value gap. So where does it work? Where did it go? It can go to 2 to 2.5. At this area, we want to see if the price rejects aggressively or not with the displacement. If we do, then we'll come back most likely to the equilibrium of the range. So you can scalp that. So the price came to 2. It stayed showing willingness to go up until it didn't, right? 2.5 to 2. You draw a rectangle. We should see a rejection from this area. Also, if I were just to draw this, I'm not really sure, but let's have a look. You see the price is respecting the midpoint of it. So anything above is premium, anything below is discount. Here we're respecting the equilibrium. We couldn't even pass through it. So then we had big displacement down. We had red candle. We started seeing this displacement. It was very displaced, very aggressive. It left fair value gap here, another fair value gap here. And this you can scalp here. So what do I always say to you guys? If we come to 2.5 and reject with aggressiveness with displacement down, then we most likely come to the equilibrium. So you can take, if you can drop, you can stay on the 5 minute or the 1 minute or the 15 second and find an FVG and enter and then trade it to equilibrium. So from this high to this low, if I plot my equilibrium, let me just do it opposite way around. From this low to this high, so the orange part is always up. Doesn't confuse you. This is premium, this is discount, this is equilibrium. Where do you think the price came back to? Right? To equilibrium. So you can have scalped an entry at this FVG and then ready all the way here. From here to here. So you enter at this FVG. That's $300, right? Easy, nice, $300, right? You made this move from here to here. So let's say again, you moved from here. Come on, man. You entered somewhere here, took a partial here for almost 5, so $250. Another here you held maybe for 300, and you want to get out here because you're an extra person. You got out here for 11 points, which is about $550 to $600. Easy, right? Imagine we just one contract. Anyway, once it comes up, we see the rejection. We can have. Now I'm teaching you guys the stuff. You can enter at this FVG and target the equilibrium. At the equilibrium, just leave it. Done. Price came back here. It showed willing to stay above it. Then it closed below it. So now we expect the price to remain bearish. It came below, used the S resistance, then went all the way down, took these lows. Right? So that's a way to do it. Now, let me remove everything. Now I took another trade on my other account. Now what did we do here? This is a bit advanced. Price went down. Once we swept this, we're in very discounted area. We swept these lows, these relative equal lows. All these lows, we swept them and we had an immediate displacement up. Displacement is the most important thing in trading. We had displacement. What do I mean by displacement? I mean it's very aggressive movement up. All right. We were waiting for a sweep of previous session low, but we didn't. And I'm going to explain why. We came up, we formed charge, FVG, low, lower low, higher high, this highest green candle, or you can, because the consecutive green candles, you can use both of them as a breaker block. This is the highest one, but it's a small, so you can use the other consecutive green candle together. Doesn't really matter. You can see this here is a breaker block FVG. Same scenario here. Unicorn entry. Breaker block FVG. Boom, boom, boom. Liquidity swept. Very important. And you can notice how the price is respecting the midpoint. This is the midpoint. More to take. We enter inside the FVG. Body tell the story. Wicks do the damage. We enter the FVG and then we target, of course, previous session high. Or how much higher can we go? I'm going to say that in a second. But I have to explain why you could have took this entry. So again, low, lower, low, high, high. This low would manipulate this low. It formed the breaker block as well. So swing projection theory of the order block. Sorry, of this breaker block. Plot your standard deviation. So you can take most of your position at London high. You can take another partial at 1%. Sorry, at -1 standard deviation. And if we close above it, we'll most likely go to 2. Did we? Look at these bodies clearly, guys. This is the one. Do you see anybody above it? No, all of them using this as resistance. Don't worry about this. Price not perfect, but you can see here. Anyway, don't look at this right now. We are here. Price came up at 1. Did we close above it? Nope. We had immediate rejection. Used it as resistance. We can add immediate rejection down with an FVG as well. Where do you think we'll go? Where do you think we'll go, guys? Well, take your Fibonacci from this low to this high. Where's equilibrium? Right here. So price came back to equilibrium. It held around here at the equilibrium and then found support and then continued going up using every order flow as red candle should hold price and all the FVGs being respected. All right, so you can scalp it from here, enter here. Once we find an FVG and support, we can take along, continue long up. But at 1, you should close your position. If you see displacement, you close it because it's going to most likely go to the equilibrium. So there's no point holding your position going back almost to equilibrium, to our, in fact, back into our, oh my God. Hold on, guys. Oh my God. I made the same mistake. We entered here anyway. This was also in the past. True, that was also in the past. Ignore the last what I said in the last 2 minutes. Breaker block, unicorn entry. We entered here. Where do we expect the price to go? From this low again to this high. Standard deviations 1 to 2.5. Once we come to, you can close your position, some of that at London and at 1. Do we close above 1? Yes, we close above. We're still using it as resistance, so the price goes down into this FVG, finds supports and continues to go up. Once we close above 1, we'll most likely go to 2. Did we come to 2? To 2.5? Yes, we did. Here we would expect rejection, just like what happened in the morning. We want to see price reject immediately here with displacement. If it does, we'll come back most likely to the equilibrium of this range. Did we? No. We even, in fact, did the opposite. We pumped, left even FVG and a volume imbalance. And we closed above the 2.5. This means we most likely will go to 3 or to 4. Since the day was nearing the end, most likely won't go to 4 and it was very overextended. We'll most likely go to maybe 3 at maximum. Sometime it won't, but we will know. Yep, it went to 3 and closed above it. It went very shy from 4 to 3. I think even 3.5 would be. You can have all these on your chart, guys. They're all standard deviations. It came straight to 3.5 to the tick. Okay, to the tick. All right, then went back down. Now what happened? Yeah. So now what happened? Now what did we do in the PM session? We swept premium session high. Now we wait for Chosh. Chosh came here. Nice. FVG. Do we have an FVG? Very, very nice. We have an FVG right here. The only FVG, in fact. Price came back here. We entered at FVG. We targeted 5 handles. I always teach you guys, target 5 handles and be content with it, right? Normally our maximum PP is here, but the day is going to be ending very soon. The day is going to be ending very soon in about 20 minutes, actually. Yeah, about 20 minutes. So we won't expect big movement back down. So take your 5 point and get out. Your stop loss would be at the high, of course. 5 point, where's 5 point? Right here. That's $250. I always ask and encourage everybody to make $250 a day maximum, no more. Anyway, but high, higher high, lower low. So this high, manipulate this high. So anchor it from here to here and you get your standard deviations. I always teach you guys, take partials at 1, okay? Because if it comes to 1 and rejects, then most likely we're going to come back to the equilibrium. The price was coming here and we did this live. Price was going down, going down, going down, going down, going down very aggressively. At 1, look at the bodies. At 1, the bodies above, the wicks do the damage. Right here, we had immediate displacement up. That means we're very bullish to go back to continue going down to the 2 or whatever area. So here is a good time to take partials. So pay yourself here. And where do you think we'll come back to? From here. Sorry, from here to here. Equilibrium. We'll come back most likely to equilibrium. The pump pumped right straight to equilibrium. And now it's chilling here. So you can scalp these. You can scalp these. If you see the aggressiveness, you can be safe that you can be safely ensured that, or we can be sure that the price might come back to equilibrium. So you can scalp the down and scalp the up. This was not a scalp. You can hold it, but think of these areas as police stops. Right? You're drunk and you're going home. So you have. Let me turn these off. You have some police stopping you on the way to check if you are drunk or not. So your home is here. You had your entry and you're going home. And you should expect that there's going to be bumps or police stopping you. Once here, 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 and then nothing else stopping you from going back home, right? So every time price comes to 1 or 2 or 2.5, it's going to be rejecting. So it came back here, it pumped back to equilibrium, maybe accumulate more orders. So this police station here, or the police on the road, once we saw them, we did some drifting, some Turkish drift kind of thing, went way back up. This is our retracement, and then you can accumulate more orders and then continue to go down. At 2, we expect another police station, so we'll again shift gears, and then we expect a retracement. That would be us drifting back away from the police, trying to find a different road, and then come back again. We will have the sky is clear. It will be the sky's clear to reach our home, right? Mostly at 5 a.m. the police will be gone for those who are living in Istanbul. I'm joking, guys. All right, guys. I hope this was useful, and I'll see you tomorrow. So be careful of CPI. Please do not trade before the CPI. Please trade after the CPI, because there's there's nobody in the world that knows what's going to happen in CPI, okay? Nobody. The news can be good, can be bad. It will wreck you. And it can go up 100 ticks, down 100 ticks in the same single candle in the same millimetric second, all right? And your stop loss won't be triggered, your TP won't be triggered. The brokers will pull all the liquidity after the market. So because they don't want they don't want someone who's right with the direction going over leverage and then making thousands of money out of them, right? That will make them lose. Think like a casino kind of thing. The house always wins. All right, guys. God forbid, by the way. All right, see you guys. Take care. Peace.